Welcome to another episode of the Chicks on the Right podcast, where we host our friend and sponsor of the show, Zach Abraham from Bulwark Capital Management, to talk about things that are happening in the financial world. And there's a big thing that Trump has brought up in a recent rally speech where he said he's thinking about capping credit card interest rates, which is kind of blowing our minds, and which we want to know, do you think, first of all, that that's just bluster, or would he actually do something like this, and what impact would that have on like everything?
You know, it's an interesting thing because typically I would be against something like this, and the reason for it is that what it would result in is it would result in like less available credit, right? So, meaning, and it's a simple way that banks or insurance companies or credit card companies are going to look at managing their own internal risk, right? Which is if they can offer these deals if 15% of people go over the limits, don't pay their stuff on time, and they're collecting 15 to 20% penalty interest effectively against somebody else. So it would cut down on the amount of available credit. I also think, though, when you look at usury laws, right, there's a precedent in this country. There have been in the times there are now. And I believe in this country, I want to say it's 29% is the ultimate cap on credit cards.
Which is a lot.
It's insane. I mean, that's loan shark money.
Yeah.
Right?
So he's saying 10, right? Isn't he wanting to cap it at 10?
Okay. Yeah. And so there is precedent there for usury. And here's one of the other factors that you want to look at. The long-term Fed funds rate average in this country is like between 6 to 6.5%. Okay, so if you decide somewhere somehow 29% is the line between fair and obscene, it seems to me that when interest rates go below the average, so too should the top level of acceptable interest rates on credit cards, and that never happened. The other thing I will say is that I'm a huge fan historically of I'm a history nerd, but I'm a huge fan of Teddy Roosevelt. And I think what Teddy Roosevelt really illustrates is that in order to preserve a free and competitive market, you have to have government intervention. As much as I hate saying that, right? Free markets, completely free markets, only remain free for a little bit of time, and then that it's because monopolies take over, right? And then that becomes an unfree market, right? When one player has undue advantage, whether it's earned or not, competition is what makes free markets work. And so I think everything in this economy continues to be way too slanted. It's sort of like, I don't know if you guys heard about this, but they just announced yesterday, we're going to allow stock market quotes to occur in half-cent increments. Right now, when you make a bid on a stock, it's made in cents, right? Pennies. So I can bid 52.07 for a stock. Well, now they're going to allow you to bid 52.07.5, right? You can make half-cent bids. Well, here's my point: is the deck is constantly being stacked in favor of the rich. The only group of people that will benefit from that change to stock quotes are massive hedge funds, massive institutions, and high-frequency trading programs. That's it. Okay, so once again, you are passing a law that benefits those guys who are already rich, who are already powerful, right? Gives them another lever and another way to make more money, right? And it doesn't benefit the little man at all. And the way they sell, it'll provide for better market liquidity. Absolute nonsense. This is all about players that have enough money to influence the political system getting their way. And I think that's happened in credit markets too, right? The fact that a bank can stick somebody with 29%, that's usury. It's debt imprisonment. I mean, it's disgusting.
It's crazy. You never pay it off. Okay, but I'm going to play devil's advocate here. So if somebody, because ultimately there's going to be somebody that's a conservative that's going to say, okay, but if you are okay with this, it's basically price control, right? Because I mean, because the government's controlling. If you say we're going to cap it at 10%, that's basically Trump saying, well, it's Trump's way of instilling price controls, kind of like Kamala's like, well, these grocery stores are price gouging, so I'm going to control that. So I'm just being devil's advocate. So then what do you say to that liberal that's like, well, he's doing it, so why can't she do it? You know what I mean?
I've long believed in the need for a double tier system, meaning if you want to operate outside of this law, you can do it. But if you're a financial institution, you need to waive FDIC insurance, right? Why do you get to pack the protection of FDIC insurance and the fact that the Federal Reserve is going to bail you out all the time and then complain about the fact that we're price controlling? Yeah, if you're going to rely on the federal government's backing and you're going to rely on all the accounts that it's going to get you, the fact that you're FDIC insured, then you need to adhere to these rules. If you don't want to adhere to these rules, that's fine. We're not going to make you, but you need to waive FDIC insurance. And you also need to sign a contract saying when you blow yourself up in the next financial crisis, we ain't bailing you out.
Yeah.
Right? It's quid pro quo. Why are we giving you insurance coverage for nothing? If you want to have this protection, then do it this way. If you don't, it's a free economy. Do your thing, but we ain't bailing you out in the next financial crisis.
Yeah. Okay. Gotcha.
And is that so you think that that's what he's proposing then?
Well, no, but I would like to see it go that way. Meaning, so quick little history here. In 1998, we repealed the Glass-Steagall Act. Okay, so the Glass-Steagall Act was put in, I believe, in 1933 or 1944 or 1934 in response to the Great Depression. And what the Glass-Steagall Act said was that you could not merge a commercial bank, an investment bank, a consumer bank, or an insurance company. That you could make one of those companies, but they had to be separate. And the reason they said that was because you start convoluting risk management protocols and you start having, when you combine these things together, you just create a bigger bomb, right? So when it goes off, it takes down more things. Well, guess which law they repealed in 1998? Glass-Steagall. Within 9.5 years, you had the biggest financial crisis since the Great Depression. So what I've long said is, hey, and there's a bunch of people going, oh, Glass-Steagall isn't fair. That's why we got rid of it. And I go, no. Look, first of all, it worked pretty well. We didn't have a financial crisis since the Great Depression until they repealed it, right? Second of all, if you don't want to adhere to Glass-Steagall, that's fine, right? Like, this is the way it should be, in my opinion. They should reinstate Glass-Steagall and say, no, you don't have to adhere to it. But if you don't adhere to it, we're not covering you. You don't get FDIC insurance, and all of your clients need to know that. If you're willing to bear the risk, that's fine. But what we've developed in this economy, in this country, is privatized profits and socialized losses. And it's wrong. It's morally wrong. The rich benefit from it all the time at the cost of the middle-class taxpayer. And it's nonsense. It's garbage.
That makes so much sense.
Oh my God, all the sense. It makes all the sense. I love it. This is why we like talking to you.
I mean, this is...
But that's why nobody's ever going to rep it either. You know what I mean? Just because it makes sense.
No, it makes total sense. This is why Trump needs to hire you. You can explain all this.
If you're listening, sir, I'd pick up the phone.
I love it. I love it.
But I'm not going to be waiting by it either. So, yeah.
It's fantastic.
Well, thank you for that, because I was like all ready to I thought we were going to have this conversation and you were going to be like, this is a terrible idea, but you're making it make a huge amount of sense with those parameters in place.
Yeah,
and
2 lanes,
this is the stuff that we learned from you.
Yeah. If you want to adhere to these rules, great. Here's the benefits from it. If you want to operate outside, fine, but you're going to do it without our protection. It just makes sense.
Yeah, it really does make sense. So how can people, we talked earlier this week about an upcoming seminar that you have. Do you want to tell people how they can get in on that action and where they can find you?
Yeah. BulwarkCapitalManagement.com, KnowYourRiskRadio.com, super easy to find. And after what happened yesterday, guys, the need to educate yourself on inflation and the impact on your portfolio is even more so, because I think you just unlocked the next wave of inflation, and I think this market's about ready to go ballistic to the upside.
Oh my God.
Yeah.
Okay, that's a great note to end this on, Zach.
Right. I know what we're talking about next week.
Yeah. No, it's pretty wild what they're doing right now. So.
Yeah, exactly. Well, thank you, Zach. We appreciate you.
You bet, ladies. Thanks for having me as always.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.